right, traders, we are on episode 7, chart patterns and backtesting. So part of the edge has got to be, you got to have a pattern recognition. You got to know what you're seeing. Plan the trade, trade the plan, but there's no plan if you don't know what you're seeing. There's a lot of different strategies. There's a lot of different patterns. So we're going to narrow that down. We're going to really dive into a few different patterns here that we trade and that we see each and every single day. Josh, what do you think?
Oh man, all over, my friend. So I'm sure we've hit up on this. Hopefully you guys have caught on this series, watched this a few times with us and realized how many times you rinse and repeat the same thing over and over and over. And that my thing at first was I pretty much was terrible at most setups, but bounce plays. And so I just attack bounce plays over and over and over. That is it. If you can't realize chart patterns and start breaking down charts and levels and where support and resistance is at, and slowly through out time, understanding, building a plan like we've talked about, I know in previous lessons here, you got to have that. So if you can break down that's all, which I've talked about forever in my, not only streaming live to the one-on-ones, is the main thing. If you got to go in and break down charts at first and understand levels and where to trade essentially. And then once you understand levels and okay, I understand over here we go long, here we maybe possibly go short, but then you have to figure that out within yourself. Who are you as a trader? Do you go long? Do you go short at first? And then within that, going long and going short, which pattern, setup, style, strategy are you attacking within that? But it all comes with the charting and figuring out those patterns and then building a personal plan. Back testing over and over and over is the biggest thing for your journey. And if you do that at first, but versus what a lot of traders do, just go to the casino, so to speak, and throw I've got a lot of money and here it is and I want to trade. No, that's not going to be how it works out. Go study, go back test, do your homework, do that at first for a few months in. Don't build bad habits, build good habits. You'll be here.
Yeah, when I first started, I thought just buy breakouts. It's a guarantee. Just buy breakouts, those flag breakouts. We're going to discuss, guys, how setups can fail. Setups give you probabilities. They give you expected value. They're not a guarantee. They're not a guarantee, but if you trade them via repetition over time and you have back tested so you have positive EV, then your equity curve is going to be going in the right direction. So why do these chart patterns matter and the psychology behind patterns? And I know we've done the psychology episodes, but it plays a part as well in patterns. So let's say we're going to show some patterns here. I'm going to bring one up. A few really. Double tops, head and shoulders, or you got the wedges. Find one, guys, that works for you. When you first start trading, don't try to trade them all. Don't try to catch them all. Send Pokemon. Don't trade them all. Find one that works. For instance, the ascending triangle is a very easy one to understand. You have higher lows forming. You can buy on that low, and that's essentially the risk. So it's important to always have that predefined level, like the rising wedge up there. You have the clear line of risk. You buy off of that. You take some profits into the new high a day and then set your stop, adjust the stop at break even, and let the leftovers continue to work for you. But the reason why the psychology matters here is because you got to understand where other traders are. So why is a double topping out again up there? It's because you have other longs up there that are looking to get out break even essentially. That's why it creates a level of resistance. There are other traders trapped in it. That creates a barrier, a ceiling. So you're going to have not only maybe shorts coming in at that level, but also longs looking to get out to profit take. And so that creates that double top, the psychology there of it for the next leg on down. The head and shoulders. I love trading head and shoulders. It works fairly consistently. The top being a very strong level of resistance. I like to get the right shoulder, shorting that, and just have a clear risk. And these plays, like you're seeing the head and shoulders, they're usually euphoric, they're overbought. So they may be up multiple. I like it better when they're up multiple hundreds of percent. Why? Because they have a lot more room to fall down. So we might have a great risk reward.
Right.
These are things that go through traders' minds. Where's my risk? What's the risk reward here? And so we could have like a 1 risk and a 3 reward on that name, taking profits along the way, of course, but that's what's going to really compound over time.
Show that back up again because I want to show you real quickly. Pull that back up. Yeah, so the double top, I'm actually going to show you an example here in just a minute when I show my screen. I actually took a double top today on ELBM, so it'll be a beautiful trade to kind of show you where I took the top on it. And then even the head and shoulders, I love that example of the head and shoulders. You let the whole entire head and shoulders form there. And I talk about this all the time. Wait for the crack of the shoulders, so to speak. Where you see that double bottom in the shoulder, where that kind of little almost W is created. Wait for the crack of that, right? And when it starts cracking, that's your entry for the move down to the bottom of the arm, as I would call it. And so you have a nice, clear, defined area to short, a clear, defined area for a stop, so you have a nice trade set up in front of you. And that's why we say wait for trades to come to you, because I would wait for that whole head and shoulders to form just for the crack of the shoulder so I can take it down to the bottom of the arm, because there's the clear defined risk and a target and an entry. It's beautiful. You just wait for the setup there. I love it.
So I was going to ask you, what confirms these patterns? Like for you, if, for instance, the head and shoulders, what are you looking for confirmation of that trade to work?
Well, usually overall, just when you I don't have an example, unfortunately, of a head, and I don't think I have one on my side of a head and shoulders, but typically it's this, and I'll show you. I'll go ahead and share my screen here if you want to fill that up for me, Mr. Kebo. There we go. This is actually a slide I did at one of the actual presentations that I did in front of about 200 people once at a seminar I was a part of. But you can see here almost as kind of say of an M shape. But my area of entry is what I'm looking for, and say the bottom of when that trend line or that head and shoulders cracks is candlestick confirmation. So I'm waiting for that first candle to close and open outside of said trend, and I'm going to scale out into support. So you can kind of see that over and over and over. Again, maybe a little wonky head and shoulders with a shoulder, a head, a shoulder. But my clear defined entry, defined risk, and there's a kind of a double top actually right there. And then I have defined target. So I have a beautiful defined target area into that VWAP with a risk right here, that 2-to-1 ratio down in that VWAP area. So that's usually all I'm looking for, is essentially wait for that trend to crack. And I'm using that candlestick confirmation below hand. And every single time, usually this is when you find these beautiful uptrend channels and you find a clear area of support from below, or maybe old resistance where you want to scale out into, like I said here, and you have what up top, a defined risk.
Yeah, stay right there. I love what you're saying. There's so much value here. And I think there's other variables here too. Like look at the mountain on the volume chart. Like that would be something I'm looking for. Like not only do you have it crack in the trend, but this is right after it just had maybe its liquidity move on the day. So usually, guys, volume's a great indicator. It kind of confirms setups for me as well. Looking at head and shoulders, you normally have that mountain, the peak and volume. The peak and volume's important. Oftentimes it identifies like a top. This was a liquidity move. So we had a blowout essentially where you're taking out tons of orders, tons of stops, and they've got their liquidity now. And now the top's set and it kind of fades.
Here's another great example of that, boss, honestly, right here. And it's a double top. So we have a clear defined area where to short. That's your risk for entry as well. So boom, and look at the big sweep of volume that Kevin's talking about. And look how it dies off right after that back on down for your clear defined short. Beautiful. This is exactly what I actually banked on earlier on the challenge. Right out of the gate, right out of the opening bell, this was something you'd be looking for right there. Absolutely beautiful right there.
Additionally, what I like about this setup you're talking about is it's reacting. Like you're not trying to predict where's the top going to be. Is this the top? No, you're waiting for it to come to you. You're reacting to the price action rather than, okay, I'm going to try to time the top, maybe even size into it. And then it's invalidated very clearly. If it retraces, reclaims like that trend line crack, then you're essentially out of it, right? I mean, that's the risk at that level. So it invalidates fairly quickly. Those are the criteria there. So is there a time of day when this setup is you're more looking for pre-market or market hours?
Depends on how long the play has been running, and that's what's even almost to this bounce play if you want to pull this back on up. So pull this up. Where I love old resistance equals new support. Old nice area of, you can tell a lot of what? Resistance. We're failing. A lot of people taking their profit. We see a huge sell off from that as well. Not just a little small guy, a really good reversal back on down to what? Not only reclaim with big, with what? New high of day move, and almost volume gets about as big, not consistently, but as big. So if you want to wait for that top to move out, this is what I love. Don't want to short the top. Got it. Don't want to short the trend crack somewhere through, somewhere right through here. I got it. And you get in for the reversal. I called this out on the live stream. Remember this, Kevin? This old resistance area. It's been running now for a good hour and a half with solid volume. You wait for the bounce play. This is where you can wait for bounce plays to come to you. Don't want to try to do it early on where there's a lot of volume that can get inconsistent on you as well. You find a nice, good area of selling pressure or early in the morning where a lot of people are taking profit. SMR, of course, you go back to just look at the chart. We know what's happened all across the board here. We're popping back on off from Friday lows. What do you think people are doing at the bell here? We talked about it earlier. They're taking profit. They take some profit, comes back on down. Well, I love finding those areas later on in the morning for support. Same thing with any of my chart setups. So yes, in pre-market, if it's been running for an hour and a half, look for double tops, look for trend cracks, look for bounce plays. Usually I like a play to be running for a good hour and a half, and that's when I come in for the move. It already showed me, like you said, if it's this, an old resistance area to take this bounce play.
Yeah.
Back up to the play you were talking about with ELBM. I don't have to find, let me drag this back up. So we have clear to find support or clear to find resistance on ELBM and a double top. That's all I'm waiting for. The play's been running for a few hours. Now I know I can come in for a play. Whether it's either a resistance, play up top or it's a bounce play, either way. So I like an hour and a half. I don't like attacking in the first 10, 15, 20 minutes of play's been moving, Kevin. I like usually, 30 minutes, 40 minutes, an hour. Then I go into attack. Once the chart has essentially proven a chart, it's been set up, the traders has showed me a nice clean chart to trade, then I can go attack it.
I'll throw this in there for free too. I kind of avoid traders, the zombie hour, like we're shorting some of these plays that pop up towards resistance. I'll avoid those because, again, we're going to circle back to the psychology of it. I like the first hour and a half, 2 hours too, like Josh is saying. Why is that? Because when you get plays squeezing up at the end of the day, oftentimes they can push through a lot of those barriers a little cleaner just because they've accumulated shorts throughout the day that get comfortable. And so I oftentimes will see strong squeezes into the close. A lot of shorts like to cover before the close. They don't want to hold overnight because it's hard to get rest. When you're in a short position overnight. So you get those guys covering, you get the comfortable ones that were looking for the all-day fade. The end-of-day moves, have you seen that too, Josh? They just sometimes are just more difficult. So our edge presents itself more a little bit earlier on in the day, and that's my hangover setup too. I just wanted to touch on this briefly. The hangovers that I go for, I like to pretty much short these near the open. These are bullish day plays the day prior, and then they lose all their volume after hours pre-market, but they're still hanging over. That makes sense. They're hanging over. They're up a lot percentage-wise, and I like to short these against key levels. The previous high a day, the previous close, these technical areas of resistance. So it's very tight for maximum reward. I think you've heard us repeat that multiple times. It's something we're looking for. Traders, what are we? We're hunters of volatility. We're managers of risk. So we find this volatility, we find the setup, and then we stab at it and allow for maximum profit potential on these plays. And the hangovers oftentimes do fade a lot of the day.
Right.
For these setups you're referencing, Josh, what would be your profit target? What are some of your exit rules on some of these setups?
Yeah, usually typically when I'm coming back down to this, like earlier with just go to EOBM to start off with, you can see on that chart here. I just wanted this back down. When I see an old area, it would have been a great bounce play. And sometimes, unfortunately, and I would love to be able to go back and forth so quickly with my brain, but I knew the resistance. I wanted to fail. I wanted the short. I took the short. Well, then I should have immediately done is went long, because this is what I typically would be looking for: a long. Old resistance areas, you can see all the way back to pre-market where we once were support. That's going to be where I'm going to take the profit at. So you've got to be out in this area. Quit wishing and hoping it's going all the way back down in red for the day. Yeah, few and far between do, and you'll see that from time to time. And yes, even the trends, we've talked about that. Go back to that lesson where trends change. We'll go back, and yes, you'll see plays where either this failed at 535 in pre-market and came all the way back down into the ones, or vice versa. Yes, failed here and came back into the ones, but we're not in that market condition now. As you can see today, we're in more of a bullish market right now. So you've got to find old resistance that equals new support. Vice versa. So if I'm taking a short and I want to scale out, it's into old resistance areas, typically most of the time, that can be new support. Or on the flip side, I want to go long off of old resistance. That should be new support. But what am I looking to do? Scale out at areas that either A, could be new support, or old support could be new resistance, voila, right here, or true old resistance areas, voila, right here. So you can see how we failed at what was old support right here around 43.80 on SMR. So that's where you take some profit. That's an old area of support. So it's going to be a new resistance area. So take some profit. But if we break above it, then you should easily see where we failed from before and take some profit in this 44.35, 44.30 area. And so my next target's here. So I'm still in on this play, on the challenge for this next move up to this target of 45.50. And so I'm usually just using old support areas, old resistance areas, and that's where I'm finding my targets.
Yeah, that's beautiful. What I'm hearing, guys, is set up the criteria. You got to set up the criteria. Have entry and exit rules, stick to the risk management, review results, and repeat the process. One of the edges I like to trade, Josh, is near a double top, but I like them to be quick. So if a ticker goes up quick and then drops, maybe even halts down and then opens up and shoots right back up, you have shorts covering and people buying the dip and we shoot up. I call it the sloppy seconds short. I like these sloppy second shorts. And the criteria for me is what the risk is high, is pretty much the high a day. And I'm looking for it to fail, because the faster the move is, the weaker the trend often is. That's what I like about it. As a short seller, I usually tend to avoid stair-steppy action. I don't like the stair-steppers. I want to see emotions. I want to see emotions in the chart. I want to see them fast, because the faster the move is, the weaker it often is going to be. You're going to get that rubber band effect. But Josh and I are both nailing these things, guys, as far as entry and exit rules. You have to have them. That's what you're hearing. There's many different patterns you can trade. I would suggest focusing on one. Pick one pattern to trade when you're first starting out. Josh and I, we're seasoned in this. So we can trade 10, 20, 30 different setups, and we know what's the difference between the A, B, and C, like we went over in a previous lesson. So we know to size those differently. But when you're starting out, you're not aware of all that yet. And it's going to take experience over time to develop that sixth sense almost. So pick one that you like. Maybe it's the one Josh presented. Maybe it's the hangover. Maybe it's the double top ascending triangle, head and shoulders, knees and toes. But stick to it, back test it, backlog, and then identify what needs refinement. But again, you have to realize it's not going to work 100% of the time, right? It's not going to do that. What you need to determine with this setup, how often does it work? What does it do? Review it. I think a good rule of thumb, Josh, that I've heard some people suggest to newer traders is keep the position on to a certain degree. Like when you're taking these positions, leave just a small piece on to keep your interest so that later in the day you go back and revisit the ticker, even if that's 5 shares, because otherwise you're just going to forget about it and move on to something else. But yes, really what's important is you need to go back and revisit.
I always did that back in the day for, no one really, unfortunately, taught that really about journaling. They talked about journaling and tracking, but not the really ins and outs of it all, and then dotting the I's across the T's and all that stuff of what you should be doing and why. So I developed my own system, and just the main thing you need to, of course, you got to go back over your own trades, like why you traded, where you traded, what was your stop loss, what was your target, all of that, of course, just break down the trade in itself. But that's where it led me to breaking down the whole entire trade for the day. Why was it the high of day? Why was it low of day? Why did that bounce there? Why did that reverse there? And then it got to me, okay, well, man, I'm missing trades here. Let me go back to this other trade. Oh, man, and I break it down. And I'm starting to realize I'm missing a lot of trades because I'm just not understanding at the time when it's happening in front of me. As I was talking about, the picture is being painted too quickly for me. I need a Bob Ross type of painting, nice and slow. Well, that's what helped me out to make it slower in person. And as it was happening was watching it after I went back and put the lines in, as I called a painted picture at the end of the day. So that was huge. And then going back through, not only going through your trade, but then going back through and put my lines in on these different tickers that ran for the day and understanding why that was high of day or why that was low of day or why it bounced there exactly. Like I just said, it started to click and made sense more at the end of the day. Well, as I was doing that, it started to click and make sense more faster as it was being painted in front of me, to where now it is like Bob Ross has painted a picture for me. It's nice and slow, but it's only that. And like I even just said, I was a bounce trader at first. That's it. I realized I could not do a lot of different setups. I needed one pitch. I was like, cool, I don't have to be the starting pitcher. Make me the closer, someone that comes in for an inning and you can just throw a 103-mile-an-hour fastball and you can't hit it for an inning. That is fine with me. I'm in the game. I'm in the game at that point, and then I can add more pitches to it.
Absolutely, guys. You're going to figure out, I've mentioned this before, what are your uphill battles? Because we all have them. And don't create the downhill habits. I'll say for me is I understand the tendency to want to think in terms of certainty. That's an uphill battle for me. And so what I do is involve myself in multiple trades to distract myself from the one. If you have this struggle as well, your desire to find this perfect strategy is what's going to keep you from having a consistent strategy. If you're just constantly looking for that holy grail is what they call it, trying to over optimize, as it says below, you're never going to reach the level of consistency. Again, it's via repetition. You're going to find consistent results, but it's going to be compounded. It's not going to be on singular setups. And we discussed how traders have blown up a lot off of focusing on individual hands versus the sum of the hands. So guys, just focus in on a few different setups and back test. Figure out where your strengths are and additionally where your weaknesses are, and then put up those guardrails.
And like you said, time of day, and time, like I said, time of day was huge, because don't think you're here all day. I know Kevin talked about that before. Whatever the analogy is, essentially, if you're here all day and you think you're getting a lot of work, and you're not. You need to understand that you need to refine that to 2 or 3 hours, maybe 4 at most. Find your area of consistency and key. In the other hours, if you're doing anything, you're just back testing, going over what's happened for the day, and how to become a better trader the next day.
Yeah, a lot equate like more time behind the computer to more progress, and it's not the case on the drawdown days. And I know when they're here. Again, we have that sixth sense. Like when you've been doing this for a while, you know when you should not be trading. Now, whether you keep trading or not, that's the discipline that sometimes you have and sometimes you don't have. As traders, we like to trade. We like to trade, but we know when the days are not there to push it, and that's why it's important to have a max loss on the account. So if the day is not optimal, you're going to step away, and then when the next day is here, you can push it. On the day where everything just seems to be working, you're in the zone, trading in the zone. So find the one that works for you guys. For instance, some traders, they don't like the high volatility, and they find themselves deer in headlights very often, and paralysis by analysis, and it causes them too much loss beyond what they initially wanted to risk. So maybe avoid those. Like the hangovers, I don't have the high volatility. I short, have my risk, and that's it. Josh has simplified his too. Trend crack, short, clear risk, good risk reward profit. When these tickers are up a lot, is essentially a hangover, intraday hangover. It's important just to define these things, guys, with these setups, because everybody can define setups. Everybody can see a bull flag. But what I've even also said, Josh, is bull flags oftentimes, for one, they work maybe a coin toss. It's like 50-50, but they oftentimes can be bearish when a ticker's up many hundreds of percent and you get a bull flag breaking out to new highs. That's oftentimes what I've seen as the liquidity sweep, upper shadow, shorts are coming in, people are profit taking, and it's done. So again, guys, there's criteria to this. It's not just, I see a bull flag, buy it. There's a lot to it. What's the time of day? What's the volume? Did we have that peak in volume on the day? What's the short interest on this ticker? Like maybe it could squeeze to new highs if it has a high short interest. So there's a lot of things to consider before, and the float is one of them we've gone over too. There's a lot to it, traders. There certainly is.
Yep. No, and like you said, just that's the thing, which goes back to what we talked about. The only way to be able to get all that and trade it and understand it as it's happening and unfolding in front of you, even with slower tickers, is just the repetition and understanding that it just takes 5 months, 7 months, 8 months, 9 months, 18 months of doing this, and you'll get it. That's why we're doing this, so you're understanding the right repetition to do. If you do what we're telling you to do, you'll get it much faster than doing, like we talked about, randomness and that random results.
Yeah, guys. The market's going to reward those who are disciplined, apply the risk management, and remain consistent. This is going to compound your results. It really is. Josh, where have you seen most traders lose? Is it them not recognizing a pattern? Because I doubt that's the reason people lose. It's mostly them not applying risk, right?
Right. Yeah, exactly. Yeah, usually it's just a hold and hope strategy for sure, or these instances where they just didn't see something and they thought that was going to be high of day, but again, they just don't apply the certain risks. So it just goes back to that. Okay, well, cool. If you were wrong, doesn't mean you have to continue to hold. So that always comes back to that hold and hope just didn't manage risk properly. Usually ends up being the nail biter, for most traders. So just understand that. That's usually what leads to that, which we talked about, the 5 big, big loss, small loss, break even, small win, big win. Just get rid of the big losses. And usually the biggest thing that you can do to do that is understanding what risk is and actually sticking to your risk. Even if you're wrong, like you've talked about, and as much as who doesn't want to be myself as a trader, you always want to be right. You're going to be wrong doing this. It's just going to happen. I mean, when you first start playing a game, and even the guy that was that Pac-Man guy, whatever, that has the world record, but he wasn't beating Pac-Man when he first, do you realize that? It wasn't and then broke the game. No, that was how many years and how many games did he play till he got to that level? A lot. And so you just have to understand, you're just not going to be able to pick up a basketball and be out in the NBA. You're not going to be able to pick up an amazing trade the pool eval and think that you're going to kill it. That's why we recommend doing the demo. Take advantage of that, or again, getting evals versus going to a real broker and blowing money left and right, because that's what most traders do. You do unfortunately have bad habits at first, and you continue to do those. So that's why I love what we're putting together here. It's just one of those things. If you make a checklist and a rule, like a little PowerPoint, almost a presentation of what we did, and go over that every day and train your brain to do this continuously, Monday through Friday for the rest of the year or into next year, you're going to get this a lot quicker and faster, 100%. So just the main thing, like we talked about, apply the risk. I think that's going to be the biggest thing for sure in the end. Yes, there's other stuff that you have to worry about, but that is the biggest thing that usually I would say go back to that. If you want to avoid those big losses, manage your risk correctly.
Yeah, you're gonna be wrong, traders, but you don't have to stay wrong.
Yeah,
you don't have to stay wrong. So that's where the risk comes in. It's okay to be wrong. It's not okay to stay wrong. But yeah, find the few setups and trade those, back test them, and really develop that experience over time. Get an eval and work on it, because it's going to take time. It's going to take experience, and money's ultimately a byproduct of trading well. That's going to wrap up this episode, guys. Stay tuned for the next one, the last one, the finale coming up. But appreciate you guys. We'll see you in the next one.